Us right now is Sunil Subramaniam. He is the CEO of Sundaram Mutual Fund. Thank you very much for joining us, as always, sir. So, I mean, it's not just a mutual fund day, it's been a mutual fund year, right?
Yes.
Phenomenal flows through 2016.
Yes.
2017, as we've discussed previously as well, has been strong, but it kind of pales in comparison with last year, though.
Yeah, but that's because I think the tactical flows which had gone into the debt markets came back in that year. Now that's stabilized, and now there's a steadier flow. And there's an interesting statistics that I saw. From Mr. Modi's time, that is May 14 to now, we've seen 2 lakh crores come into the stock market, equity mutual funds from investors, okay? The previous decade, it was 1 lakh crores. So just 3 years has seen twice the amount of inflows that a whole decade saw. So that shows you the fundamental confidence of the Indian investor in the economic growth of Mr. Modi's regime. And that's why they are coming in and putting money. So I think there's a fundamental shift in that asset allocation.
Okay. The recent rally, though what we've seen, is also in line with what's happening with a lot of emerging markets. We've seen Russia rally, we've seen Turkey rally, and the Nifty is up 13% year to date. How much of our gains are because of FIIs getting bullish on emerging markets, or how much of it is because of what you said, maybe the Modi effect or other factors?
See, if you look at the scenario, I think June through September, FII flows were very strong. Then October onwards, enhanced by demonetization and the uncertainty around the budget and the elections, FII flows became negative. Right? Now, post the election result, FII flows again have become positive. But consistently, domestic flows into mutual funds have been positive right through. So if you ask me what's caused the delta in terms of the latest rise in valuation in India, it is the FII flows. Because that's the one which has been volatile, going in and coming back. Right? Whereas mutual fund domestic flows have been steady. So they haven't caused the extra spike which has just happened post March 11. That's entirely the net FII interest going up into our markets.
You have quite a hefty target for the Sensex.
Yes.
In the next 3 years, you're looking at 40,000 Sensex only, right?
Yes. See, the reason for that from an analyst perspective, if you look at last 4 years, Sensex or Nifty earnings have been flat. But the markets have been trying to discount the future. In our opinion, in the next 3 years, right, there's going to be a catch-up on the growth of the Nifty. So that long-term trend of Nifty is about 14% growth. So we believe that something like 18 to 20% earnings growth over the next 3 years will be happening to set right the long-term average growth through around 13-14%. So if you're then factoring in 18 to 20% earnings growth, and we see current forward PE valuations at about 17.7, right? But you look at the flow picture, and look at the trend of low and stable inflation at 4 to 5%, we expect a greater reallocation from fixed assets to financial assets. So domestic flows coming in, India's economy looking good, we see 17.7, and at the peak 2006 to 7, market PEs were at 23. And I'm not saying it's going to go back to 23. Even if you conservatively take a 20 forward PE and a 18 to 20% earnings, you'll hit the 40,000 number on Sensex in 3 years' time. So basically what we are saying is the first leg of this cycle is going to be driven by consumption. And like 12 to 18 months from now, the infra segment is going to come in and support. So we are in a 3 to 5 year time frame on a fairly bullish trend on earnings growth. And apart from the Nifty and the Sensex, where a lot of our focus goes on, the BSE 500 cash flows have actually been steadily on a rising trend continuously. So overall, Indian corporate earnings growth or not. But the top companies, there's been a lot of volatility because sector-specific information has impacted their earnings growth. So from a perspective of expecting 18 to 20% earnings growth, and valuations actually headed up from 17.7 to 19.5, 20, I don't think the number of in 3 years' time or 40,000 Sensex is a difficult thing to achieve.
You know, all the points are taken about strong flows, PE expansion, that can happen. But where is 18-20% earnings growth coming from? Why? What?
See, I'll tell you,
how do you
from
back
our
that
own
up?
funds, right?
Yeah.
In our own funds, if you see our mid-cap fund, our own earnings projection for the next 3 years is 25%.
That is a mid-cap fund, but we're talking about the Sensex, right?
Sensex. So I'm saying it's 25% mid-caps and 17 to 18 on the large cap is not... See, it's very simple. Nominal GDP growth with a 5% inflation and 8% GDP growth is 13%, right? Don't you think your companies can deliver 3 to 5% alpha on the country's nominal GDP growth? See, what's happened over the last 3-4 years, the past has been impacted by the fact that huge sectoral plays, metals were hammered, commodities were hammered, right? Energies were hammered, and then they are coming with something else going down. So when you say Sensex earnings was flat, it's not that every one of those 30 companies was flat. There were companies there which have posted 20-25% earning growth, and there are other companies like banks which had NPS with disclosure, which have posted it down. Now, we believe we are closer to the end of the NPA cycle. The incremental NPA posting is going to be much better. So definitely, even bank earnings are going to see an upside. So 18 to 20% from a level where 3 years it's been flat is not really a dramatic growth. Okay. That's the point I'm trying to make.
You know, we don't have the industry mutual fund inflow number for the month of March. It should come out very soon over the next couple of days, but it'll be pretty strong.
It'll be pretty strong because going by our own company, March was better than February, and February was better than January. And the funds which have been seeing inflows are typically a mid-cap fund and a rural India fund. Over the last 1 year, rural India was about 200 crores beginning of the year. It's about 950 crores now. So I think rural is essentially a consumption and diversified play. So if customers are putting in this kind of a diversified play, I'm sure the industry as a whole would also see, in my estimate, about 20,000 crores of inflows in the month of March. Gross. And net should be half of that.
Okay, quick last word on what you'd recommend to retail investors. It's mutual fund days, so your quick 2 lines on that.
Yeah, one aspect is that...
I mean, actually, why don't you recommend funds or schemes? I mean, I think that would be...
yeah, absolutely. Yeah. So there are 2 things here, right? We believe that India is now 2/3 of the way from a vicious economic cycle to a virtuous economic cycle, right? Vicious to virtuous is about low inflation, supply constraints and all that. When that happens, cyclical companies benefit, right? So cyclical companies fall sharply when the cycle is bad, rise super sharply when the cycle... Now, since we are confident about the cycle, this is actually a time when we will tell customers that don't just go behind blind diversification, but pick the sectoral and the cap curve, which is going to deliver value. In that context, then, we are bullish on 3 sectors. So consumption, infra, and overall banking and financial services. These are 3 sectoral funds where each investor must have some kind of allocation.
So you're saying going ahead here, from here, it makes sense to buy a sector fund. To
increase the allocation to a sector. So earlier I would say sector would typically be 2 to 3% of a customer's portfolio. I'm saying hike that to 5 to 7% now. One. Second, again, between large cap versus mid caps, right? One thing with the large caps is the fact that if you see consumption and banks are big parts of the Sensex, and there the valuations have risen up fairly well. So from that perspective, right, large caps will give you a decent nominal growth of rate, whereas mid cap and small cap companies are essentially more cyclical. So the upswing when the economy swings is far, far higher. So to that extent, customers should increase their allocation to mid-cap and small-cap funds for the next 5 years, because that will deliver double the returns that a simple large-cap fund will deliver. So I think if you ask me for specific funds, select a diversified mid-cap fund, get in as small in the cap curve, but do it on a buy and hold basis. So you can look at micro-cap, which is space, say, below 1,000 crores, right? Or below 3,000 crores. Stay for 5 years. Right? If you stayed for 5 years in these so-called perceived risky funds, you have never lost money in a 5-year time frame, but you actually made, when the going was good, 50 to 70%, and on average, 23 to 25% returns. So saying economy is in a good place, valuations, domestic flows are in a good place, India is looking very attractive from an FIS perspective. So from that perspective, this is the time to sharpen your focus and put it more into smaller and mid-cap and increase your allocation to those sectors which we see have value.
Okay. All right, Sunil. Thanks very much for that. So that